Welcome to the Future's Edge. I am Jim Urio, and that's Mike Arnold, our chief strategist at Path Trading Partners and unfilteredinvestor.com. Before we get going, I want to thank our main sponsor, which is unfilteredinvestor.com. Please go to the website, check it out. What Mike and Bobby have done with technicals has been amazing so far. Also, Marco, Independence Arc Farms. We always complain about how big food conglomerates are taking over our food supply. There is something we can do about it, and that's to patronize small, independent suppliers. Marco at Independence Arc is the best. Go there. He's got the best meat. Welcome to the Future's Edge. Michael, how you doing?
I'm doing well. How about you, Jim?
Good. And, I feel a little guilty because the title of the show is Technical Breakdown. And I wanted people to wait, shit, is technicals showing us that markets are breaking down? No, I just meant that we're breaking down the technicals and seeing what the markets are doing. But you're not saying that we might be breaking down. That's correct, right? What do we have up on the screen first?
We got the S&P. Well, might as well,
Yeah.
what better market to start with than the
With the
S&P?
big dog, right? Yeah.
We are overextended. Let me just start with a cleaner chart. There's your weekly chart with the rotation zone. So generally after across the rotation zone, I do 3 to 5 rotations back up. We're at 1, 2, 3, 4. We're getting tired. Doesn't mean it has to end. I'm still looking for pullbacks this is the weekly rotation zone, still looking for pullbacks. It's just we're getting divergences there. We have fewer and fewer stocks participating. We have, again, AI and the MAG7 doing all the heavy lifting. So we've had really good earnings, but they were sort of dialed back. So they were a lot easier to beat. But, some companies are beat and going down because they didn't beat enough or the guidance wasn't enough. Other companies are, hey, let's just buy it. But that seems to be mainly, with the MAG7 and AI. So I'm cautiously long. I need to wait for it to return at least a weekly rotation zone, get a secondary bounce that fails. And that's when my tone will shift. So I'm not worried about a return to the rotation zone. I'm fully expecting one again coming up. Excuse me, coming up shortly. What's going to trigger it? I don't know. But then the secondary reaction, because we've already hit off it 4 times, that secondary reaction is going to be very critical. And
Mike, can I stop you for 1 second? Because I want to explain to people that the rotation zone, for you guys who just joined us, I know we get more viewers each time. The rotation zone is the space between the 8 and the 21 exponential moving averages. That green line is the 50 simple moving average. And not that we have to worry about it for now, but one way at the bottom of the page is the 200 simple moving average.
The green line is actually the exponential 2. The only simple is the red line, which is the 200.
Oh, the 50 exponential. Sorry about that. But the rotation zone is more what I was talking about. That's the 8 and the 21 exponentials. And what you can see that there is no question that this works. I've been involved with Mike for about 2-3 years now, and I exclusively use these moving averages now. And you can just see on this, these are the weekly chart, keeps touching it, boom, as soon as it comes out of it, it gets a little boost. Not a huge boost. Now it's still widening. They're all still heading higher. So that's still a bull chart. So we're looking about what is going to take it out of a bull chart. Mike, back to you.
Yeah. And if you look at the daily, the prior major breakout level was back at 6,800, which is the bottom of the daily rotation zone. If I could clean up the chart a bit, you see the bottom of the daily rotation zone, which is also 21 EMA on the daily. You see it's right in line with the top of the prior breakout area of the candle bodies. So a pullback to there doesn't bother me. And I watch, just to clarify stuff, I watch for closes below the 21. Does that mean I get short? No. I go to neutral mode where I start then looking for, if we're in neutral mode, I'll favor buy and sell setups. In bull mode, I'm going to favor bull setups. Why? Because the trend is up. And when it flips over and we eventually get to a bearish mode again, like we did in February through the capitulation bottom in April, I'll favor sell setups. So right now I still have to favor buy bull setups, especially in the pullbacks to key levels. I don't just magically buy when it pulls in the rotation zone. I look at a shorter term chart against very key pullback levels. In this case, if we got a pullback to 6,800, I'd be looking for any kind of bullish setup to trigger that has the proper reward to risk ratio. On the weekly, we could pull back all the way to 65 50 area without still violating the very strong uptrend. Would it start doing more technical damage if we got to 65.50? Yes, we'd need a much stronger secondary bounce, or we could be putting in a major topping pattern. But we haven't even approached the 21 EMA since the cross of it back in May after the capitulation bottom in March and April. So there are cracks forming. There's some things under the surface that are not optimal. But again, the market can keep ignoring things, and I can't go short without a short setup, and I don't have one yet.
So what about, let's go to even like a 60-minute bar and see, like, if you're someone who's looking to get long, is there any signal to you to get more long?
Right. Oh, well, there is. I'll show you let me put back on my lines. And this is, I covered this today. Again, we've tried to break above a declining trend line. The key area I'm watching right now is right around 69.05 to 69.10. That's proven to be pretty solid resistance. So in any bounce play, it has to sustain above. We can just go to 69.10 before I get more aggressively bullish. So any break above there, it has to show that that's turned into support. Like it broke above there earlier today, very early this morning, but again, collapsed right back down. If we go to a short-term chart, you see that is not turning it into support. That was goodbye.
Yeah, no doubt about it. Right. Yeah.
So that's in the short term what I'm watching for. And we still have the magnet price of 7K higher. And you know how people love those round numbers, especially the big round numbers. So we have not ticked off 7K yet. Funny enough, I have a harmonic level at 7,003. So I'm still watching on a potential rotation up that we can sustain above 69.10, taking out the most recent highs around 69.50, and then 7,000 on the macro will be the resistance area for me. The minor resistance area will be 69.81. The major resistance area will be 7,000.
So people look at that and they often refer to it as psychological levels in our business. They're not psychological levels at all. It's math. And the reason it's math is that there is a crap ton, and that's a very sophisticated financial term, a crap ton of options open interest that tends to form at these big, huge numbers. And the reason for that is that if 6 months ago you're targeting a big move in the S&P, you're going to put on the 69.50 7,000 call spread. You're not going to target 69.95 or something. It's just not the way people think when it's 6 months in advance. Is that a good way to explain it, Mike?
Yeah, and also institutions, think about that. Let's say they're doing big hedging positions. They're not going to do even 69.50, 7K. They might do a level at 6,800, another level at 6,900, and another level at 7,000. Right. You know, they're just going to shoot because they're going to say, okay, we're trajectories up there. Maybe it's going to peter out around 6,900 to 7,000. Maybe even I'm going to do like a condor between 6,900 and 7,000 with the head, you know?
Yeah.
So I'm not going to get down to, I'm going to do the 69.25, 69.50. You're not going to do that.
It's like, exactly. But it's like, and it's not laziness of the mind. It's just expedience and efficiency. Like even when I'm pricing up options for clients and someone will say like, that's got a 49 delta. Screw your 49 delta. Just say it's got a 50 delta. Nobody cares about that extra 1 delta in a structure. But anyway, so that's the point. It's kind of a similar point to when you're figuring out your options targets. It's like horseshoes, you know, it's 69.95 and 7,000 are not that big a difference. So you just target the easier one. But anyway, I digress.
Yeah. And here I use harmonics a lot. And for example, I have a 70.55 to 70.59 harmonic level in the short term. If we get above 7,000, do you think I'm going to set up an option trade going 70.60? No, I'm going to go to the 70.50s. All right. This is the way I'm going to set it up. And then the next level is if we keep going, which we very well could, we have 73.07. I'm not going to go to 73.05s or 73.10s. I'm going to go to 7300.
Still, of course.
It makes sense. So I'm going to use the same round number theories or the closest round number, and the open interest at the 50s and the hundreds, they generate a lot more open interest. They have a lot more volume, so I can get tighter spreads too.
Yeah, so it's good. So I've been fighting that battle for a long time when people say, well, it's a psychological level of 5% yield. No, it's not psychological. It is actually math. Let's switch to the Nasdaq. And while you do, I've been very vocal about this. I believe that the fervor in AI and the mania has reached a point where I do believe we're in some level of bubble. Does that make a difference? Of course it doesn't. It makes it's worthless because a bubble can go on for a year, for 2 years. That's why we need technicals to tell us when it's going to turn. Is it a little bit manic and feverish? Mike, you think it's a little bit manic, don't you? Good.
I've been into the manic phase for even the last rotation back up. This
Yeah.
is the weekly chart again. I mean, we're going into even the last little. We got a 1 week pullback at the beginning of October, and then 3 weeks up.
Boom. Yeah.
I mean, when you can only sustain 1 week pullbacks, or look, in August, what we happen to get a 2 week pullback, but the second week was an inside week. You're in something that just keeps, hey,
Yep.
there are no short setups. Our prior major breakout level on the weekly chart was 25,000. I look at the candle bodies. That would only take us back slightly below the 8 EMA. We're at 26,102. Would it be, shocking if we had 25K? No, but you know the headlines that would come across, Jim. It's like, market plunges.
Markets in turmoil. I used to belong to that station before we had irreconcilable differences. Markets in turmoil. Yeah, it's pretty amazing. Can I add one thing too? Is that
Sure.
Mike and I have both lived through the dot-com bubble. This is obviously has stark differences to the dot-com bubble. Back then, the Nasdaq traded at 200 PE. None of those companies made money. These companies that we are talking about now, not only do they make money, they make serious money. And your PEs in the Nasdaq are up to, I think it's in the high 30s right now. So it is stretched by historical standards, but not nearly at crazy town. So could we have more to go? But yes, obviously we could. But I will say this is that if you look at your portfolio and you are just loaded up on these NASDAQ names and you're not allowing for the possibility of a 30% haircut in the next year and a half or so, then you're part of the fool and his money are soon to part things. This is a great vehicle now for making money, but it's also, you have to be hedged, you have to trim and trail, and you have to, bulls make money, bears make money, pigs get slaughtered. Don't be a greedy pig. You don't disagree with any of that either, do you, Michael?
No, be greedy when other people are fearful, be fearful when other people are greedy.
We are fearful right now.
And we're fearful. That does not mean I'm short this. I still will do some, especially with low VIX, and we still have the tariff Supreme Court thing coming up. We could still get some volatility there. I still think normally I let my hedges expire with options in October. Hedges can be rolled forward this year with, there could still be some turbulence in the markets. And I keep getting from people, it's a no-brainer. The end of the year rally. Whenever I hear no brainer,
so
it's like, yeah, here you go.
Take them. Right.
Take them.
Nothing
No
is a
brainer is a big red flag, especially retail telling me, people I meet, people I talk to, even over Halloween, Friday night trick or treating, people know what I'm doing, and they come up to the door, parents with their kids. I keep getting, I got to buy more. I got to buy more of this. I got to buy. Everything is AI based, and it's a no brainer into the end of the year.
Jesus.
There's no risk. Well, here I have up a monthly chart. 1, 2, 3, 4, 5, 6, 7 months up without a pausing month. The breakout level on the monthly chart in NASDAQ is all the way back at 21,621,700, which would take it to the bottom of the rotation zone. And if you don't think we can hit that, the last little tantrum in March and April took us through that. And then we formed a capitulation buy signal. Could it happen again? Yeah. And could you imagine the freak out if we return to even 22,000? I mean, we can't even drop 3% without the headlines that we just talked about scrolling by with the markets in turmoil, sheer panic. What are you going to do? You took a 3% loss.
Yeah. Yeah. We've taken bigger losses than that before. It's a lot. Yeah.
Imagine going back to 22K in the NASDAQ, the freak out pattern then.
Oh, geez. It would be annoying because we've been screaming at people, stay hedged, keep your stops in place, keep puts on. I usually have, like, of the portfolio that's my long-term portfolio, I usually try to keep an average once a month of about 1.5%, 1 to 1.5% in put premium. And, depending on, skew and things like that, I change it in different ways. But right now I've upped that by a hair just because, again, we're making money on the upside. Don't be greedy.
And if you look at this monthly chart's even on the monthly chart, we return to the 8 EMA quite frequently, except for recently.
Yeah. Yeah.
The 8 EMA is at 24,000. So that wouldn't be out of the question to see a couple thousand point drop over maybe it could take a couple weeks,
Yeah.
but that wouldn't be out of the question. And we'd still maintain an uptrend on a monthly basis.
Right. So tell me this. So when I look at that chart, I see something. The one anomaly that's right now at this moment, I guess today's the first day of the new month, is how far this month is up above the 8. It's a little bit unusual compared to any of the other candles that we've seen. Is that a metric that you use? If it starts to, is it like getting too far on the leash and it needs to be pulled back in?
Yeah, it's the snap. Also, the further you get away, the larger the snapback generally is.
Okay.
So, could we just go sideways and correct? Yeah, but when you're this far away, it is not normal. You
Right.
see, we got a little stretch back again, January, and we snap back rapidly. We got stretched back in December of 21, and we snap back really big, even to below the monthly rotation zone.
Yep.
So that's what I always gauge things in reward to risk ratio. Right now, I see is some more upside, but am I going to risk 20, 30% to make another 5%? Not on a longer term basis.
Yeah.
This is a tradable market, not an investable market.
Right. I agree 100% on that. Can we, by the way, the tradable, let's go down to a 60-minute bar and see if there's anything like a trade of the next week or so because we talk about investing.
I'm watching the same thing. Here, you want the levels? First, I'm watching, we got a declining trend line. Tomorrow, I'll be watching on a potential break or overnight above about 20. You can go to 26,200 to be a little conservative. It has to follow through. My line in the sand is right around 26,275 that it has to sustain above. And then my next key targets are right around 26.5. Okay. Just above 26.5 to 26.535. And if this does a power move higher, the next key area is 26,700, then 26,959, so 27,000.
Right. Okay. So if you're getting our tone here, is that we are both still bullish, just not like if we're not committing in new investment money, but we're just not getting out of anything. And we are cautious. I mean, if you're not cautious, again, we've seen this before. When people start to see dollar signs in their accounts, they're like, let it ride. This is great. We're making money. And then it can end badly. Can we move to gold, Mike?
Yeah, just real quick. And even on the Nasdaq, let me just point something out. The last breakout level was about 25,333 to 25,400. Bottom of the rotation zone. It would not do any technical damage on a daily basis to even see a return to 25,400. It would freak people out because people are so bullish, but we'd still stay above the most recent breakout level. So don't be shocked. There's still a breakaway gap here, both in the S&P and the Nasdaq, above the prior major support level on a daily basis. We could easily still fill that gap without doing technical damage. I'd just be looking for other bounce setups once that happened.
No, that makes good sense to me. Can we switch to gold? It's totally your call.
Yes, we can.
Okay, before we switch to gold, I want to say something real quick. I'm actually down here in New Orleans. Look at my room is at right on the Mississippi River. Tell me if you can see the river right outside the window there. It's kind of cool.
Now we can see the river.
Yeah, boats and barges coming by. But anyway, I digress. What I'm here doing in New Orleans is speaking at the New Orleans Investment Conference, and it is a hard money conference. And 6 years ago, we here who spoke at this conference, who were considered gold bugs, were like the fringe, crazy, tinfoil hat, chicken little people. All that has changed. This conference, I was at it last night. It is absolutely packed with people now who are talking about gold and silver. I actually think that the trade is morphed from holding any sort of paper gold into actually holding physical gold and silver. That's going to be the point of my speech tomorrow. That is also why we've partnered with American Gold Exchange and their CEO, Dana Samuelson, who's been a friend of the show. We are partnered with them. We want people to be able to sleep at night by owning physical gold and silver. And I fully understand that when you own gold and silver, it becomes a little bit of a hassle of where to store it, how to protect it, how to feel safe. I can't help you with that. I have guard dogs and guns, but I do know that we could be coming up on a time where you'll be glad you have gold and silver. Mike, you have physical gold and silver, don't you?
Oh, yeah.
Good. Yeah, so do I. Yeah. I didn't
And I
want
might
to.
have some of those other aforementioned protection tools.
Yeah. Okay. Yeah, exactly. Good luck, I always tell me. And when I'm doing a podcast from home and my 200-pound dogs are just barking at people walking by, I'm like, okay, good luck. Good luck getting by them, because then you got me and the guns after that. Well, we'll see. And you got to find it. But anywho, so here we are with gold. By the way, I think if you're not a stark bull of gold, and I'm going to mention this in my speech as well, own the physical gold and silver and then hedge it in the paper markets. That to me seems a much better option than not being exposed to the metal at all. But let's go.
Let me start because again, look at the monthly chart in gold.
Shit. Yeah.
Even with this pullback, which we did revert to the weekly rotation zone, look at how extended we talked about with the Nasdaq. Look how extended gold got from the rotation zone and then the snapback.
Mm-hmm.
We have still not hit the monthly rotation zone. That's back at 3,600. Now that's going to keep climbing. Could we pull back more? Sure. Would I be short this market? No. I'm using these levels. We triggered a upward sloping neckline, head and shoulders. It's lower probability since it is against the weekly rotation zone. If it was going to show up here, you could see it dipping into the rotation zone. We also, on a shorter term basis, have a confirmed but not triggered double bottom pattern on the 4-hour basis. I'm watching to see if we get a 4-hour close above 4,047. A 4-hour
that negates the pattern, or no? That validates the upward move of that double bottom. Is that what you're saying?
A close. It's already been confirmed. It has not been triggered
because it's got to settle.
Confirmed is a trade above it. Triggered is a close above it.
And then how far a big of a move could that suggest?
Here's exactly what I'm looking for. The targets are officially 4106, so 4100, 4137, 4167. This is considered the secondary reaction to the upside. The key level, let me change the color of this. In order for gold, this is a tradable bounce. It has not been triggered yet. If we get through 4167, the major line in the sand I'm looking at, to shift the probabilities besides this being a corrective bounce to we should retest the high area, including the 87.5 harmonic, it needs to close above 4212, 4,212. On this, if the bounce continues, it's got to close above there, which is also a very key breakdown zone. You can see right there, they line up exactly. Then I'd start watching for the returns, and the targets would be 4275, 4335, and a possible new highs. If we cannot get a close back above 4211, if we do trigger the double bottom, I'll be watching for potential topping patterns in that area. Why? Because that would be the secondary reaction. This is very key. When I talk about secondary reactions, we finally return to the weekly rotation zone. If I draw the harmonics on here, here is the 62.5 level right here that I had on the daily. That is critical on the secondary reaction for it to get above there. If it cannot get above there, we could be for another rollover pattern. Why? Because the monthly is still hyperextended from the 8 EMA.
Crazy. Yeah. So it's just been an amazing run. Can we look at GDX, which is the senior miners, right?
Yes, it's the Van Eck Gold Miners ETF. Here is your weekly. Again, everybody was going hyper bullish, and then look, 1 week. Oh. 1 week returned us. Now we are looking for a setup. If this is a good shout out, it's a good call, Jim, because we are just starting. Again, this is a Monday, first Monday in November. If this can get above last week's high and close above it, it would be a percent B buy pattern, which is a great secondary reaction. Again, we can't give trading advice, but that's something I'm keeping a very close eye on. So it's got a trade going into throughout this week. I'm watching last week's high. If we can break above that, it could be an intra-week long, but I will only hold it if it closes above that level. That level would be 73.06. Then what would I be doing? Here would be my targets. I'd be looking to raise a stop at least of 74.49. The initial stop, by the way, would be below last week's low. You can see into the rotation zone with a potential buy setup that has not triggered yet. My first target, 449. All right, 74.50. Next target, 76.61. I look to at least take partial profits on a bounce play between the 50% and the 62.5% harmonic, which is between 76.61 and 78.73. If it closes above 78.73 on a weekly basis, then my next higher targets are 80.85 and 82.97, and then a potential breakout to new highs. That's the exact way that's set up. If we trigger and roll over and close below last week's low, I don't want any part of it anymore.
Forget
Why?
about it.
Because we are still, look at this on the monthly, we could pull back a lot more. And again, that's my worst case stop is on a close below last week's low. As it rallies up, I will move my stop up. I will trail it, especially on a daily basis.
Got it. That makes sense to me. Dealer's choice on the next either asset or heavily traded stock.
Well, all right. How you still like copper?
Sure. Yeah. By the way, you know my story in copper, right? And how Bobby always talks about how if you like copper, be long copper. Well, I wasn't. My whole copper, my proxy copper trade was one of the big miners. Again, my licensing is futures. I don't talk about individual names. So I have, and you know what I have. Can you say the name of what I have? You know, Freeport. But anyway, so the point is that, so I come in one day, a couple months ago, you see it at the far left of the chart, and you see copper's up copper's, no, I'm talking about the, where was it where copper rallied? Oh, this big, huge green candle from back here, because copper rallied because of a mine problem and in the stock that I had. So copper was up, my stock was down, and it was a very, very painful day. So Bob Iacino, I hate to give him credit for anything. He's right. If you're bullish the commodity, be long the commodity. Screw these different names. But anyway, here's copper.
Yeah, copper, which is interesting because, it's the industrial metal. But here's a key example. This we triggered a little minor double top pattern, or we on the shorter term time frame. Would I be short copper? No. We still a rising trend line. I'm just watching for pullbacks closer to 50 EMA. Now, if we close below 481, the short-term uptrend in copper's over for me. Not only would we have triggered a weekly, let me just put it on here, a weekly double top pattern, a skewed double top pattern, we would have also closed below or closed right at the 200. We might get a little bounce there, but we'd have broken that trend line. So I'm still looking for cautious pullback longs in copper. And then that next bounce is going to be key, because why? You remember I just talked about between the 50 and the 62.5 harmonic, Jim? Look where off this low, from high to low, we bounced multiple times through October and sold off. We spiked into that level. Now we spiked into that level again, and we've pulled back a little. So in order for me to sustain a bullish move now in copper, I'm still looking for pullback trades. But on any rally, if we cannot get above $5.34 on a closing basis, roughly 535 is the upper end of 534. My target areas for any bounce plays are still between 515 and 535. I'll look for topping patterns in there to take profits. The only way I'll stay bullish on this is if we can sustain a close above 535, though. Other than that, it's still tradable to the upside.
Okay. So more broadly, when you look at that move at the end of July, okay, that huge down move. Yeah, huge down move. Now we've been trading, trying to make it back, and all this time we've only made half back of that move. When you think of that in a very, very broad sense, you say to yourself, it's not a great endorsement of the underlying strength, or does that even matter to you one bit?
It's taken a very long time to get up here, and it keeps losing momentum up here. That's why, again, cautiously, very cautiously bullish. Would not just be rushing out to buy this, but we are still in an uptrend.
Yeah. Okay. That makes sense. Can we look at silver then?
Well, sure. We'll just go through let's start with the bigger chart. Pulled away from the 8 EMA. I mean, what did this get up to? Close to 54?
Yep. Crazy, isn't it?
Dropping it. This is where you could get these slingshot reversals. And even on the monthly, look where the 8 EMA is in a month.
Yeah.
Could this thing pull back to 42, 50, 43 levels? Yeah.
Yeah.
So do not be shocked. Now, we don't have a super strong buy pattern like we do, a potential buy pattern like we do in gold on the weekly, but on the daily, we have a inverse head and shoulders pattern.
Oh, I see it. Yeah, okay.
So I will do this in real time. Let me just map out the levels because I had not done that yet. It needs a close roughly above. If you want to be conservative, just remember 49. If you want to be a little more aggressive, it's about 48.80. But 49 would really cinch it because we got a couple
This is
key
the
highs up
futures.
there.
This is the futures, people, not the cash spot market. So yeah,
Yes,
just want to make sure people know.
this
Close
is
above 49. Yeah.
correct. And this is still, I'm still on the December contract. So
Okay.
this is D's.
Yeah.
And it does not, we don't roll here until the end of November. So
Correct.
we have some time
Yeah. That's
on that.
interesting.
Then we roll to March. Targets on that. This would be considered a secondary bounce. Why? Because we've returned to the rotation zone on the weekly. We have not sustained a bottoming pattern. We have the potential bottoming pattern. I just went over to trigger prices. The key level, the key first target for the inverse head and shoulders is 50.30. The area I need this to close above to consider a secondary bounce continued move up is $50.67. That would shift the probabilities to retest right around 51.70 and then 52.73. So that is the bullish setup for silver also. When I say this, and this is true in gold and silver, if we can get these secondary reactions, they could bounce up here, get above the 75% harmonics in both. That would set up a massive, massive potential weekly double top, which I'll be on again, I assume. Don't make assumptions, but if this were to set up, this would be the major line in the sand. It's just something I'm keeping an eye on these bounce patterns because we could set up for some massive potential double tops, and that would be where I'd have long-term trailing stops for like futures or things like PHYS, which is a Sprott physical holding company, or GLD. So that is going to be a very key. This next move up, once we get these patterns to trigger, if they trigger, is going to be very critical in the potential topping area for gold and silver. Doesn't mean it has to, but it will give us great levels for long-term stops.
Okay. Love it. Love it. Now, what do you want to look at?
Let's just, dollar index.
Yeah. How about it? Good idea.
Why? Because, boy, we've talked about this in the Unfiltered Investor.
Right. Yeah.
People, and it's been very bearish. People are very bearish, very bearish. We've even talked on this on Futures Edge, how bearish people were. This is a massive, you can see it here on the monthly chart, a massive potential double bottom. It's easier to see on the monthly than the weekly, but look at this.
Yep.
We are really close to potential triggering a double bottom. And a lot of institutions are still are skewed heavily short the dollar. So I am keeping an eye. You can see it here on the weekly. It's the bottom back in at the end of June, the bottom in the middle of September, and the peak from the end of July. So I'm looking to see if the dollar index closes above 99.80 on a weekly basis. I've already been bullish on this for a while, but we're approaching a very critical area. Does that mean it has to skyrocket higher? No. But if this does trigger,
which would be a settle above 99.80, right?
On a weekly basis.
Got it. Yeah.
Then, and we might get the first cross the rotation zone. Then I will be even more aggressively looking for pullbacks in the dollar, or conversely, since the euro is 50%, I'll be looking for rallies in the euro to potentially short them for the next few weeks to months. The pattern is not triggered yet, but I am keeping a very close eye on the dollar index because of that. And that could have some ramifications for a lot of markets. If we start rolling into continued dollar strength for weeks to maybe months.
I like that a lot. And by the way, I want to mention something about the dollar index too. And this is actually going to be part of my speech tomorrow as well. The dollar index does not measure the strength or weakness of the dollar. The dollar index measures the strength or weakness against the euro and the yen. That's 70% of the index because it was kind of set up weird. Remember, it was set up before the euro was created. I know I'm not talking to you, Mike. I'm talking to them. It was set up before the euro was created. So there was a bunch of these other European currencies that all got moved into one, making a disproportionate representation within that index. So again, I think it's an important and a very tradable instrument, and it does give you a suggestion as to which way the dollar's going, but it is more about which way the dollar's going against those other two currencies who also have profligate spending, irresponsible central banks as well as us. We can move along.
Yep. And, it does shift if the dollar has a more sustained move against the euro for a series of weeks. It really does shift things with how companies will hedge and look at things.
Oh, no. Yeah, it's
moving forward.
important. It's definitely, that exchange rate is very important, but it might not necessarily affect gold or egg prices or shit like that if you're saying the dollar's weakening, because it might still be okay at home, but it is important if it gets weaker against the euro.
Yep, exactly.
What do we got here? Oh, Bitcoin.
Bitcoin. This is another potentially interesting one. It closed below key support on a daily basis about middle October, rallied back, could not get above the 62.5. Look where it rallied back to, right between the 50 and the 62% harmonic. And what have we proceeded to do? That's why I'm telling you, if you're playing these secondary reaction bounces, do not ignore the area between. If you take one thing away from this and you're in the technical analysis at all, do not ignore the area between the 50 and the 62.5 harmonics from the key highs to lows, because that's definitely an area you want to raise up a stop. And we've rolled over again. And this week, we have not been able to close below 100,600. You can just remember 107,000 as the easy number to remember. Why? Because this could be breaking down, and this is a very, very key support area. Does that mean Bitcoin has to crash? No. But it could see extended pullbacks, especially there's the 50 EMA and the 50% harmonic from the lows in April to the highs at the end of September, beginning of October, and we could easily retest the 100,000 area. And if we start closing below the 100,000 area, it could get interesting from a psychological point in Bitcoin. Other than that, guess if we continue to break down, guess we'll all be looking for a potential bounce setup between roughly 94,000 and 100K.
Okay. So that's interesting. And by the way, I know a lot of you people trade a lot of Bitcoin, and so far in unfilteredinvestor.com, it's not, we map out like 5 different macro plays at the beginning of it. And if enough of you send messages, the people who are subscribers to unfilteredinvestor.com, which many of you are, I will try to push Mike Arnold and Bobby Icino to include Bitcoin in it. That's, I promise you. What now?
Yeah, and just remember, because Bitcoin is considered, it's a risk asset.
Hell yes, it is.
It's not digital gold. I'm sorry. That's another topic for another day. But since it's been a risk asset, and it's, just like a lot of the stuff in the Nasdaq is a highly speculative, I'd put some Bitcoin in highly speculative, and Bitcoin has not been able to eke out new highs. Well, things like a lot of the speculative stuff in the Nasdaq has. It's why it's a potential canary in the coal mine for me.
So, Carly Garner, who's a friend of the show and a friend, said the same thing today on Twitter, which I thought was very interesting. Because in the past, we never thought that Bitcoin was an important asset enough to be the thing that could begin to drag everything else down. But if Bitcoin starts to really start to go into a vacuum, it could drag the Nasdaq down, because the correlation exists for actual real fundamental reasons, meaning, I will explain it. Okay, when they started trading Bitcoin at institutional desks, they just kind of threw it, because it was highly volatile, they threw it to the people who knew volatility, which were the Nasdaq traders. So oftentimes those guys have these huge positions on, and when one of those assets goes down, they have to sell the other to meet margin calls. But anyway, Bitcoin is important right now.
Yep. The other one I'm keeping a close eye on.
So is everybody else. NVIDIA. You're not alone on this, Arnold.
I know I'm not alone. But look when we've got stretched. Here's the monthly. Okay, look how far we were stretched back in June of 24. Look at this.
Wow. Yes. Okay. Yeah.
Quick return. I mean, this went from 140 to 92 in a couple months.
I remember it well.
Then we got stretched again. Look at this. Stretched again. 150. Did not close below the monthly rotation zone, but dipped. I mean, this dipped down below 90 again.
Yikes.
Setting up a major percent B buy pattern on a monthly basis back at the end of April, beginning of May. And now we're 1, 2, 3. I'll call this a neutral month, 5, 6. Look how extended we are again.
Yeah, very much so. Yeah, it's a scary one.
Easily, this could return to 180. If we get another major sell-off, could we see 140? Yeah, which means we're getting a slightly bigger than a 3% correction in the Nasdaq.
Yikes. Yeah.
So that's why it really is important to don't get caught up in the daily time frame especially if you're looking to stuff on the lot, like a buy and hold thing. Does this mean you got to panic out of it? No, but I'd be looking to say, okay, a return to the weekly rotation zone is 190. Would that freak me out, or am I still comfortable with that? We already went through those monthly levels, which I would not be holding this. We do have today, we set up a may never trigger, but a daily potential double top. Is that, oh my gosh, I have to run from NVIDIA? No, but the final target on that, it's a slightly lower probability is against the daily rotation zone, because within the daily rotation zone, we could easily catch and bounce back up. But the full target area, I just mentioned 190, the full target area, it's actually, I'd have to switch to the conservative side, is roughly 188.50, 189. So
could you do me a favor? Those two tops, for it to be a double top, what's the most they can be apart?
Okay, here's the exact rule. Making me give away all the secrets.
No, you're giving away a couple secrets. If you come to the unfilteredinvestor.com, you will get access to you'll be able to take advantage of all the secrets.
Well, you know what? This is, I do not mind helping people out with this, because there's, just learn to do some things. I cover this on my own live stream every day at Pat Trading Partners on YouTube. Here's the levels. On any bounce play, at a minimum, it has to pass the 75% harmonic. The stronger ones, it gets to the 87% harmonic. On the other side of it, it cannot exceed, if it gets above the 25% extension, you see how I have extension harmonics up there, then it is off the tables. Anywhere between the 75% from the high to low to the 25% extension from the low to the high.
Okay, that sets up that second top.
Double top territory.
Yeah, 25% in either direction. Yeah,
25% in either direction. So that is your key. That is your key thing. If I was going to draw a rectangle up here, let me oops, here we go. If I could draw, thought I hadn't snapped that. All right, let me just do this. It would be, you're visualizing here.
Yeah. Oh yeah, I see it. Yeah.
So anywhere in this area, so it can be lower than the prior high. It can be slightly higher than the prior high, but that's the sweet spot for a double.
Makes sense to me. Let's hit crude.
So that is the setup. And now if I go to the weekly, what would this, funny enough, and it has not triggered yet, but look at where that sits, right at the, could return us to the top of the weekly rotation zone.
Interesting. Okay. That's fascinating. Do you want to hit, crude for the last thing?
Crude? Sure. Crude's
a pig.
Crude is still, I'm in scalp mode on crude.
Yep.
Because it does not have a long-term trend, and crude can stay in consolidation and move. It gets sharp and sudden moves, but it doesn't really we broke down. We're still below the breakdown levels that we formed from the big consolidation pattern over the summer. At the end of the summer, going into September, we broke down. We're still testing the bottom of that level. So And also those levels are, if you look at the weekly rotation zone, you can see right here, here's the breakdown level I was talking about.
Yep.
Here's the weekly rotation zone. So I'm still looking for sell setups anywhere up here, Selfie sell setups.
Yep.
And I'm still looking for us on drops. I'm looking for scalpy buy setups. And here are the levels I'm looking at: 61 on the downside, 58.50, and then 57 for buy setups. To the upside, I'm looking around 62.50. If we start closing above 63, then it means something shifted, and I'll watch for it to reestablish a potential range up here again. And then I'll shift to support coming in around 61, 62, and major resistance up around 65, 66.
Okay. That makes sense.
But
What else
these
you want to
aren't
talk about?
trending moves. This is like, you could be in it for 3-4 days and then, all right, I'm out. This is not something that, hey, we're going to stay in crude for weeks. That's
Right.
not the kind of market crude's in.
No, not at all. It has a lot of proving to do before it can be that. Here's my next question. Have you ever been to New Orleans?
Yes, I have.
Do you like New Orleans?
Yeah, I like New Orleans a lot. I've
Yeah.
been on, stayed there multiple times. I like, it's a good restaurant scene.
Yeah, I think so too. I like coming to New Orleans. I come here once a year to this conference. I have for the last 7 years. And I really like coming here. And then like yesterday I got here, I went to Mother's. I like to not, I like to tell everybody from the conference that I'm getting in about 3 hours later than I actually am, just so I can get my bearings down. So I by myself went over to Mother's on, I don't know if you know the old school since
Yep.
1938, just real Cajun New Orleans food. They had baked ham and turnip greens and red beans and rice. Man, I ate so much; it was delicious. So I'm excited about the food, but I can do about 3 days of the food, and then I want to get home to my normal food. I hope I'm not insulting the New Orleans people. It's just it's got a strong taste.
Can we cover one more market real quick?
Of course, yeah.
Not to over inundate people. This is another very interesting potential pattern in the
10 year.
10-year note futures. We do have a potential double top. May never trigger, but if this does, this is the weekly chart. All right. And if this were to trigger, this could be a shift in interest rates again. That's why I'm keeping an eye on this. This would
Interest
be a
rates higher
breakdown,
would be, yeah.
which would propel rates higher on the 10-year.
Yep.
And it would be out of the way of the weekly rotation zone. So
Ooh.
I'm keeping a very close eye on if we do close on a weekly basis below 112.06. It's 112 and
112.06. Do you know
637.
what the yield would be on that or no?
Well, it would be right around, you don't technically have it in here, but it's going to be roughly, I have to work that out, but it's going to be roughly closer to about 4.15, 4.16.
Okay, so we'll say what 4.16 to be safe. A settlement above there triggers it, triggers it,
Triggers.
and then it could have some serious upside yields, downside price.
Correct. That's why, and again, because something's a potential does not mean it could become an invalid pattern before it triggers. But that's another one. Just like the dollar index, I'm keeping an eye on from a macro perspective. This is another one that I'm keeping an eye on from not just a trading perspective, but from a macro perspective, because interest rates, especially 10-year, affects a lot of things.
Makes huge sense. I like it very much. All right, can I play us out?
Yep.
Thank you guys all for joining us. I love doing these live shows. I love all the interactions we get. And you guys' support on this has been amazing. We truly appreciate it. You guys know we want to create our own media platform where we can give honest opinions and not have some sponsor or overzealous producer tell us what we can and can't say. Our sponsors, unfilteredinvestor.com. Please go there. Check out the website. American Gold Exchange. By the way, yes, and we are partnered with American Gold Exchange. To be fully transparent, I hope to make money from this. But I sought them out because I think it is critical for people to start protecting themselves against what could be a major coming financial storm. And if you want to go deep into that, contact me on Twitter because there are some signals. The explosion in M2 money supply, the fact that the Fed has stopped QT and is starting to talk about QE again, to me could be a major, major indicator that things are going to go poorly over the next year, let's say. I don't think it's set in stone, but I want to be protected. Also, Independence Arc Farms. Everything's better. All this doom and gloom shit we talk about. If you have a great steak from Independence Arc Farm in front of you, it goes away real quickly. Contact Marco. He will set you up. That's Mike Arnold, Chief Strategist, Path Trading Partners. I'm Jim Urio. This has been the Futures Edge.